Are Realbricks returns too good to be true? Oh, what's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online. As usual, this is a question I've been asking myself quite a bit about Realbricks. You know, I've asked this about a lot of different platforms already. In many cases, the answer has turned out to be yes. I don't know for sure that it's the case here yet or not, but I wanted to share with you a little bit of info that I picked up just digging into some of the info that Realbricks sent out. So if you watched my other videos in this playlist, you know I've run the numbers on a few of the homes that I looked at investing in on there, and it was very difficult to understand how the dividends were being paid based on my assumptions on how that property would operate, like where the capital was coming from, right? It doesn't look like the home itself was spitting out enough income to pay dividends. I think I mentioned, I own some shares in one property that's not rented yet, but got paid a dividend on that. And when I had asked, one of the Realbricks employees about that, he said, "Oh yeah, we just, the company paid that as sort of a thank you for being an early investor," which is nice. I like receiving that, but at the same time, it scares me a little bit because it's not a real return, right? And so if I'm, it's not generated from the property, and so I'm worried that we're getting paid too much, and it's creating a false impression of how well the properties are doing, and it's coming from either the company's balance sheet or in that case, that's where I believe it came from. It came from the company, not from the reserves that had been raised as part of the deal. We've seen this with a lot of the other platforms where they paid, either like on Lofty, we saw rent credits. On ARC7, they're doing some guaranteed returns for early years. And it's great until it stops, and then you're stuck with the actual performance of the property, which may not look the same as what it looked like in the early days when you were getting these bonus returns. And so on the one hand, it looks crazy to complain about getting free money, right? But on the flip side, I just want to make sure I really understand where the returns are coming from. It allows us to understand how durable they are. So they put out this thing, this article that says, okay, we've paid out 5 consecutive dividends. And one of the things I thought was interesting is you can see that there's a downward trend in that dividend, right? It was 2.25% the first quarter, then 2%, 2%, 2%, and then 1.75%. And they've broken this up on, the ones that are actually producing income versus the Garrison, and this is the one that I had some shares of before I bought the other two, and so that I got paid the 1%, even though the property's not making any money. So the income piece was already worrying me a little bit, but then I came across something else in this article that really made me nervous, and I want to just share this. It was the middle of the night when I looked at this. I haven't reached out to Realbricks and asked them, hey, what's actually going on here? But I wanted to put all these thoughts out there, and actually thought maybe some people watching this might have answers. If you invested in the Stag, the Templeton, or Cedar Ridge, and you received your distributions, did you get an explanation of what's going on? What went on at that time? And so basically they're saying, we were able to, they said this in an interesting way. They identified opportunities to exit properties when it aligned the best interests of our investors. And they, returned original capital plus additional returns, above the initial investment. They didn't say we sold these properties, which is what I think that they mean, right? Like, if you're exiting properties, it normally just means you sold it. But they're not saying, hey, we sold it for more than we bought it for, right? They're like, hey, we exited them and we returned more capital to each investor than what they put in. And so, my mind would just, upon first reading, thought, oh, they sold these properties at a profit. And we're able to distribute extra income. And so I'm going to go through each of these. So this is the Templeton. I looked up, the actual addresses of each of these using the SEC docs. I don't see the address anywhere on the listing pages, which would be nice if they were there. And maybe it is, and I just couldn't find it. Let's see. Yeah, they don't actually have the address anywhere on there. But, you can always just pull up the SEC doc, find the address, and that's what I did, right? And so I looked up each one of these properties. So this property, they raised for $415,000 in equity. The original purchase price was $380,000. We can see in the public records. Let's see. These are the old sales. I actually don't see the sale to Neptune REM LLC. That's kind of interesting. So I'll go to the Terramin Group, because Neptune REM is, I believe, the entity that that's the investment vehicle, right? So that's the entity that is owning it, and it's a series, so it's should be different series for each one. These are the series names. So okay, we can see when they were the grantor, but what's really funny is we don't see one in the public records where they were the grantee, and that's super strange, right? But in this transaction where they're the grantor, the sale date is November of 2024. In this article, it's saying the Templeton was distributed, January, February, March, in April of 2025, right? So that's like 5 months later, and distributed with a 10%, additional total return. Well, this sale was for $405,000, and in the listing, it says the purchase price was $380,000. I'm not a mathematician, but I can see that after selling costs and everything, you'd be lucky to break even on that, right? $25,000. When you're the seller, that what is it? Doesn't there's definitely not 10% profit built into that. So, did Realbricks just pay out an additional profit? And again, it's nice if they're doing that, but if they're doing it but not letting investors know, hey, we're doing that, then that's problematic, right? Because I don't want to be getting into an investment thinking, oh, well, look, they're getting all the, they exited these early ones and they paid out more than they expected, or, more than they bought it for. Look at how successful it is, when it really wasn't a successful exit. It was a subsidized exit, right? And I don't know if that's what's happening for a fact, but that's what that looks like to me. Okay, and then I looked up, let's see, which one was next? The Stag? Cedar Ridge was next. So, is that right? It's hard to keep these straight, because the Cedar Ridge and the Stag have similar addresses. Okay, 7927. Is that the one I'm looking at here? 7927, yeah. Okay, so what did I say this is? This is Cedar Ridge. So Cedar Ridge, we bought for, purchase price $360,000. At least on this one, we can see that, right? We can see. I don't understand how this Terramin Group works into it. I don't know, but you can see the Terramin Group here conveyed it to the Neptune REM LLC. So this at least looks right. Like we had it, right? We owned it. Is this the same? And it's for the same price that they bought it for. So that's interesting. I wonder if the Terramin Group is related. Oh, great. And I closed the SEC docs. Let's see. Let's open that offering circular again. Oh, okay. Refer to REM Terramin, or refers to the managing member. Oh, okay. So the Terramin Group is the managing member. So that's a related entity. So that makes some sense. It seems like in this first one, maybe they didn't do the paperwork right, because we didn't have, the entity, the transfer from Terramint Group to Neptune in the public records. Maybe it could be a recording problem. Maybe they recorded both deeds at the same time or something. I don't know. But at least that clears that up a little bit. And it explains why, there was this transfer for $0, from the managing member to the LLC itself. But then again, okay, this sale looks like it happened 7/3/2025. We got the distributions. So this is Cedar Ridge I'm looking at. Okay, 7/3/2025. So 2 months later, the distribution actually happened. But what's concerning here is, okay, purchase price $360. We see that in the public records, but then when when the Realbricks entity sold it, they sold it for $350,000. So that looks like they sold it for a loss. But they're saying they paid out, 6.5% or 6.5% return. I don't understand, even if they collected some rent in the meantime, it's really hard to see how you would do that, right? How you'd buy it, sell it for less, what is going on here? Yeah, buy it for $360, sell it for less, sell it for $350. You're going to have closing costs and end up with 6.5% extra to distribute to investors. I mean, I don't understand. I don't know. So if you were invested in any of these and you received that distribution and an explanation, I would love to hear about it, because it drives me crazy when I can't just look at what's happened on these deals and figure out what's going on. And I'm going to show you just the third one. The third one's the Stag. Oops, I don't need it. We know it's the last one, so let's see. Yeah, the Stag. The Stag was purchased for $360,000. Is that the same one? No, they both purchased for $360,000. This one again, you can see it sold in February 27th, 2026. When did they say they distributed this? Okay, so this was actually much quicker, right? This was distributed almost immediately, like within a couple of weeks, and with a 5%, additional capital. So a 5% return. But so this was purchased for $360, and then was sold for $350. Again, I mean, it looks like that's sold for a loss, right? Both of these are just like that, right? Bought for $360, sold for $350. I don't understand that math. How are we getting to a profit and getting distributions? So there's a couple of things that could be going on. One, I think it's possible that somehow public records docs in this area don't get, well, let's see. Real estate transfer statement. Total purchase price including liabilities, 405. Yeah, let's look at one of these 360 or 350s. Where do we just see that total price? Oh, it's smaller on this one. Let me look back at that one. Okay, yeah. Line 22. Oh, 350. So it's really hard. So this is, this is what they filed as far as like how much it sold for. So I don't understand. I mean, it just doesn't make any sense to me. How are they actually making a profit? And if they didn't make a profit, and if they just paid that out, were the investors that received these distributions, were they told about it? And if so, like, why is this being? I mean, the really aggravating part is if that's accurate, which, I mean, based on the publicly available data, it seems to be. Why are they, touting these as successes, right? I mean, if I sold a property for a loss, but then I just came out of pocket and paid you, yes, that makes me feel good as the investor who invested in it, but it certainly doesn't give me confidence in your ability to make money on future deals. So that just really worries me. I don't know, and so I'm hoping that I'm missing something, right? Because I did recently invest in 2 more properties on here, right? Let's see, which ones did I buy? I did it because they're offering some bonus money, right? But in both the Jameson and the McAllen, uh, not a ton of money for me, and I'm trying to experiment and see how this works out. But it's worrisome to me to see. I already had some doubts about, are they able to sustain this dividend from property operations, right? That's what I really care about. Like, I don't just care about me receiving that dividend, because it's great if they're just subsidizing it and paying it out early on. Like, that feels good as an investor. But if it's not sustainable, I don't want to continue to invest because I've been getting paid money that doesn't really come from the business plan, right? Like, those end up really just being marketing dollars from them. So I don't know. So I already had that income concern, and now I'm super curious. Are they selling properties at a loss as well? And if they are, I mean, even the one that sold for a slight profit, I don't know. Let's see, what is this? Yeah, I mean, this was like a $20,000 difference. Even that, with closing costs, it's really, let's say if you paid 5%, realtor fees on 400,000, that's 20,000 right there. So, and I mean, that's below market rate in a lot of markets, and it's also not including any other closing costs. It's certainly not providing enough to give you a 10% return. Even if that sale, it's only $20,000 on a $385,000 investment. It just doesn't, the numbers don't add up. And so whenever that happens, it makes me really nervous about investing on a platform. I understand these companies have to, market their product and put some spin on it. But in a situation where if this is actually the case, if they sold properties for less than they were purchased for, which is just what it looks like. I mean, just from looking at their data and the public sales data, yeah, I mean, I don't want to hear about those as if they were successes, and because that's going to obviously this is a marketing piece to make me want to invest in future deals. But if that isn't, if this didn't come from their ability to buy and sell, sell for more than they're buying for, if it's actually just coming out of their own pocket, that's not helping me at all in the long run, right? It's helping whoever invested in those deals, but it's not giving me confidence in their ability to continue to repeat it. Anyway, that's all I really wanted to share about this, because it makes me, I am more concerned today than I have been. I was already a little bit concerned about the income piece. I thought, hey, we're buying some properties at a decent discount based on, I did a couple other videos in this playlist. Oh, before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please, as you can see, I invest in some of these platforms that I'm not very confident in. So please do your own due diligence on those links, on the, any of the promises they make as far as like bonus money or anything. Also on the platforms themselves, and any properties you see me buy. Just because I buy something doesn't mean that you should. And then also, you just wanted to mention on the YouTube channel itself, I have playlists for all the different platforms, or several of the different platforms that I'm using. And so the Realbricks one, if you look back a couple of videos, you'll see the one that I did where I'm concerned about, or where I did the math on what I think the, is how supportable is the 6% dividend, right? That's all I just wanted to mention about that. But yeah, so the downward trend here, that's not great. It's great that they've continued to pay dividends, but are these really coming from property operations? I mean, we know for sure that this 1% isn't. I'd love to know is some portion of this being subsidized as well, too, right? Like, were these 2%, are they actually, are the properties actually performing to such a degree that they're actually able to pay this out? And, that's why I'm just always looking for more transparency around numbers for these. But then, yeah, I mean, I'd love to see more detail about these. I didn't see anything. I mean, I'm looking at the old property listing pages, and it just shows that they're closed, right? Like, it just says closed, but it doesn't give us any detail. It would be fantastic if they, gave us the explained what that deal, how that deal worked. And I wonder when they say the extra 6.5%, if they just mean they paid out that dividend in the meantime. Oh, that could be interesting. And so I think that's possible, that they're just saying, hey, we paid out 6.5% in dividends, and then you got your money back. That's not really how that sounds to me, but that could be what they're saying is going on. I mean, to me, this sounds like they're saying they get their capital back plus some additional return, not just we collected dividends and then sold it for zero profit. But maybe that's what they're saying there too, and I guess that could make a little bit more sense. But it still doesn't explain how they buy at $360, sell at $350, and make any money, right? Like that's something that's just terrifying to me. All of these platforms, they are, most of them are still very new. A lot of this stuff, one of the things that I've figured out a lot of times when digging into stuff is it's a transparency problem, it's an explanation problem, it's a recording or reporting problem, and that could be what's going on here. I mean, this one is really hard for me to come up with a scenario that explains what's going on here outside of what I've just jumped to the conclusion. But yeah, anybody that has more details about those 3 sales that were invested in it, or if the people at Realbricks want to reach out and let me know what happened, I'd love to hear about that too. From you guys, because I don't know. I think I want to be able to invest in across a whole bunch of these platforms. I did like, there was a lot I liked about the 2 recent deals that I bought pieces of. I think the market that they're in, I want to be in that market. It looks like we're actually getting them at a discount from what the builder's selling them to other people for. So it'd be fantastic if I was confident that we'd be able to get those returns. And also if I understood, like, hey, where is this, what actually happened with these past deals, and is it something we have to worry about in the future? That's all. That's everything I've got for today. Until next time, I'm just going to keep making mistakes so that you don't have to.